Ladies and gentlemen, Kei Kim here. Welcome to the Daily Update. Hope you guys had a good day trading today. Market is down slightly there, 0.16% on the S&P. Looks like kind of a mixed day today. It looks like NASDAQ and semiconductor slightly green there, Dow slightly red. Russell 2000, transport slightly green there, banks down. Energy down a little bit more today. However, energy's sector been up quite a bit last couple of days. Biotech up a little bit. Same with the healthcare. Home builders up. Utilities down. Retail's up. Emerging market is down. I don't think I've seen numbers like this in a while. You can see how some are red, some are green. Very diverse with green and red. And you can see some of these numbers of 1% negative energy. Same with utilities in emerging market. And we got retail up 1.4, we got transport up 0.4%, while the S&P down a little bit, NASDAQ at 0.7%, 0.07%. So you can see it's been very, very choppy, lethargic, mixed market that we've been in this year. And this is type of market, you know what I mean? In this market, you have to encounter all sorts different climate, different environment. This is an environment that we've dealt with this year. This is why we want to not care so much about, day-to-day fluctuations, not to get intimate with the, micro-term move price action. We want to focus on the long term because this has been the story this entire year. Grayscale, Bitcoin, and gold, silver miners, they're all down 2 to 4% today. Dollar up a little bit, oil flat, treasury bond 0.5% negative, and VIX is up about 3. Let's stick with the S&P 500 ETF Spider 65-minute chart here. So we talked about on the last night's update that bulls need to get above 448. This is important pivot. That's the prior resistance or prior slide support acting as new resistance here. I did loosened up my short-term moving average here so we can count for this year, and then recent price action right here, and keep them in mind with that. You can see today what happened was this is where we close. And I proposed that for bulls to make a run up, they needed to see a bullish run and stay above it for 2 hours, or gap would have been the best case scenario, which we talked about. Well, what happened, because this is in resistance, and what happened was we actually gapped down. You see what I'm saying? So that's why, because you have to deal with this resistance. That's the short to micro-term resistance here. And I think once it gapped down, you can see once it gapped down, there was a gap that opened, right? It quickly got filled. You can see how that upper wick here, that signifies that the gap was open first hour trading. In the intra hour, it opened up here, and then quickly bulls fill that gap, and that's what the upper wick is all about. And so because of bulls spent this energy filling this gap, we quickly came back down. But I have to say that if this gap remained open, I don't think we would have gone back up here towards towards the end of the day today, because this gap got filled right away. You guys know that when the gap gets filled, it's going to act as instant resistance, not to mention my short-term moving average residing in the pivot at 448. So even though that's going to act as resistance, even though we did see that first hour tankage, you can see what happened was it came down, hit that my pink dotted moving average there. We talked about this level yesterday. We even talked about, should there be any kind of slide going into today, bulls need to pull something like this, potentially inverted head and shoulders formation. If the buyers lose this level, we come back down. You know what I mean? I think things are going to be a little bit more hectic for the bulls. They have to pull something else, maybe some sort of an inverted head and shoulders like this, left shoulder head, right shoulder, to make that work. Well, because this gap was filled, I think there was a way to get back up. I think if that gap wasn't filled, it would have been a little bit more difficult, because I think that would have been another, selling pressure that would came about and might have been even go lower. So with that, on the second hour, we see that hammer candle right on that secondary a short-term moving average there, pink dotted moving average, and then we saw follow through on third, and then we saw pause there, resting. Fourth hour, wow, you can see on this, or that's a fifth hour, fourth hour. You can see on the sixth hour, what happened on the sixth hour is that on the last hour today, well, bulls attempted to make a run for it to get above 448, and you can see 448 definitely is important, significant level. Bulls tried it here, failed. Bulls actually tried it right here. You see that big gap up, right? Sometimes when you see these candles, you don't really know what happened, but this is where it closed. Remember, this is where it closed the day before. This is where it opened. You see? So there was a big gap up. So 448 is that psychological number and also micro-term and short-term overhead supply. So when we gapped up, it tanked. And then we saw another gap up, right? Remember, this is where it closed. This is where it opened. That's why this green candle, this is red candle, right? So we both tried it one more time to gap it up, tanked. And then March Tire got to 448. Next day, tanked. And then we're back here again. So bulls trying really, really hard here to break above 448. And we have a shooting star candle. Remember, this is hammer candle. That's a shooting star candle, right? They're opposite to each other. This is gonna support bearish case. This is gonna support bullish case. However, all kinds of candlestick analysis, candlestick patterns, they all need follow through to confirm it. So in the first couple hours, we start to see this in coming down. Well, this shooting star candle will do its part and putting pressure on the buyers, and we may see slide to the downside. So what the bulls need to do, again, best case scenario for the buyers, gap it up like 448.28 or 440.30, maybe above this wick there, gap it up. And how much of a gap up is that from here to there? Not a whole lot, 0.3%. That's all it requires for buyers to make this transition smooth and pleasant, is to see all it requires is 0.3% gap up. Then if you can see that and hold above that gap up in the first hour or two, there's a good chance this thing is ready to get up to 450s there. And well, I'm talking like mid 450s, potentially filling this gap and printing the all-time highs. So this is very important. Otherwise, just thrusting above it might work too. But if we see thrust, make sure there's no shenanigan on the first hour, second hour. You know what I mean? Make sure we see something like that, after 2 hours has been passed tomorrow morning, because there's a chance, sometimes on the first hour, it's like it's rallying, and then second hour it comes back down, rallying, second hour comes back down, and exposing that long upper tail, and that thing will crash back down. Well, when I say crash down, I mean in the micro term. So this is important level of 448 for both bulls and bears, because I think if you can get above 448, I think bulls can have chance to come to 453, fill this gap. But bears, obviously, you do not want buyers to find strength again and find confidence in this level. So buyers will find confidence. Buyers will rush in. FOMO buying will occur if we get above 448 with strength and hold above it at least for a couple hours. Obviously, bears, you need to get below that short term or that secondary moving at that pink moving average there, right? That moving average has been acting as support quite some time. You can see right here. So that's where you need to be a break above it or below it and go after this moving average, which is the midterm moving average currently residing at 440. So, overall, obviously, I have to say in the midterm, I'll be bullish or bearish. Midterm bullish, higher low, higher low, higher low. You know what I mean? We don't know if this thing is a higher low or not yet, right? This thing, we don't know. We're hanging around here. If this thing starts to get up, yes, that's a higher low. If this thing starts to come back down, that was a sideways move before coming back down. So this is kind of that juncture. It's going to, reveal the fate of this market for the rest of this month. Let's check out the oscillator and see if we can extract any more information. So last couple of days, we talked about that bullish divergence right here, right? We saw that. We saw that move. And I think with that bullish reversal, there's a little bit more adamancy here from the buyers. They're really pushing it. And that secondary pink dotted moving average is also supporting it. But obviously 448 is not getting or not able to, not letting the bulls pass over that. And with that little hiccup here, well, we did see a slight cross here after this thing has been, you know what I mean, breaking out of this with the confident looking separation. So when we see, you know, oscillator kind of crosses in the middle of the road, a lot of times that signifies that trend may continue here. Usually you want to see the cross at the overbought or so, but usually during the, like, in the middle of it, it's not always the case. I've seen oscillator comes down in the middle of it. It happens more in a downtrend, but obviously we're in an uptrend. I'm talking about midterm. We're in an uptrend, a midterm. And so I don't want to put too much weight on this cross yet. What I really want to put more weight on this is 448. So 448 is very important. Oscillator just basically telling us that we don't know, right? Oscillator is telling us, are we just going to cross back up? It's going to come back down. So oscillator just kind of hanging around, you know what I'm saying, waiting until the price action to kind of tell it to where to go. Because obviously oscillator is going to be acting as a subordinate to the price action. So I think it's going to be important how this market behave. Tomorrow, above 448, buyers will rush in. Below it, probably come back down, retest it. Things can get hectic though in this vicinity. I don't get too, if you're a bear here, if you're a seller, I don't get too aggressive selling in this vicinity, because sometimes, you know, these consolidation might be a basing period. Buyers do that sometimes and then, you know, get right back up. So we want to respect the fact that in the midterm, we are in an uptrend. And I know some people saying, well, market is up too much, man. It must correct. It's due for a correction. Well, you've been saying that for the entire year, not to mention late last year. So you've been saying this for 10 months straight. So stop saying it. Stick with the trend. If the market is ready, market will show us more evidence of that. So as long as trend is up, we want to continue to assume the trend is valid until it gives us a clear signal that it has been reversed, but we do not have a clear. I'm talking in the midterm, I'm talking in the longer term, I'm not talking in the short term, or the micro term, right? Let's see how the market plays out. Come back for you. Actually, tomorrow is the Friday, so I won't be doing a video this weekend. I'll come back for you on Monday, but I'll tweet things out on my Twitter and StockTwits account, and I'll give you guys some levels and things like that. That will be tomorrow morning or midday, right? Enjoy your evening. Good luck trading tomorrow. Have a wonderful weekend. I'll talk to you on Monday.